Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer. I'm Operations Manager for Wickham Financial Group. I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy. Thanks for our listeners jumping on another call. Pretty positive week. I mean, if we look at the main indices, so the Nasdaq, that tech-driven area, that was up about 2%, where we saw the S&P 500 of about 1.6%. The Russell 2000, that small cap area, up a little less than 0.5%, 0.3%. So we did see 10 of the 11 S&P sectors rising last week, where we saw technology leading up about 3%. If we look at the commodity front, we did still see a good surge in gold with the anticipation of the Fed lowering rates. That was above 3,700, settled in about 3,685 per ounce. If we look over at oil, that rose about 1%, despite some IEA reports, some geopolitical tension supporting some of those prices. If we look at interest rates and the Fed outlook, which is going to be really key for this week, we'll be looking at inflation, employment data supporting, some expectations that the Fed's going to cut rates and hopefully continue. At least that's what the market's looking for. If we look at the U.S. Treasury yields, they did fall anticipation of amid some signs of some labor market softening. If we look at labor market, we saw the benchmark revision. We saw about 911,000 fewer jobs created between March 24 and March 25. Jobless claims, they spiked, possibly due to some things going on with Texas. If we look over at the employment confidence, we saw the job mobility fell to a record low of 44.9%. We go over with inflation. Inflation CPI numbers, that was up 0.4% month over month. So it's up about 2.9% year over year. Now, that was above expectations. We did also see the PPI, the Producer Price Index, that was down 0.1. So we saw that reverse from prior month surprises. So maybe that helped out in terms of anticipation of the Fed lowering rates. Look at consumer sentiment, that fell to about 55.5. That's the lowest since May. And inflation expectations, a 1 year remain pretty steady at about 4.8, long term about 3.9. Globally, we saw Europe, the ECB held rates at 2%, lowered inflation forecast. We saw UK come out with their GDP growth stalled due to some inflation headwinds. Over in Japan, we saw long-term bond yields hit some record highs. And over in China, we saw export growth slow to about 4.4% year over year. Now this week, it is really about central banks, Feds, interest rates. So we're got the Fed decision coming out on Wednesday. We'll have a lot of Fed talk. Anticipation, probably stepping in doing 25 basis point pullback. Maybe there's a slim chance that they're going to do 50. I know the market's anticipating that they're going to potentially do more. But we're going to have a conference press release from Chairman Powell. We'll have a lot of dot plots. We'll have a lot of conversations from the different board members that will be getting out and about around town. We'll look at the Bank of Japan. They'll be coming out on Wednesday. They're expected to cut rates by 25 basis points. Bank of England. Now, they got a pretty tough decision because they've actually seen rising inflation. Their August CPI will be released on Wednesday. That will definitely influence their outcome or their decision. Bank of Japan, they're meeting on Thursday. Odds are below 50% on what they're going to do. If we look at U.S. economic data, which will be rolling out, we'll get some retail sales, some manufacturing survey, some housing starts and permitting. And then we'll kind of wrap some things up with some international data. Looking at China, they'll have the industrial production retail sales numbers. Jeremy?
Gotcha, Graham. I had a question for you. I know that you mentioned that the FMOC is going to be meeting tomorrow. If they come out and they have their rhetoric or their talking points are not what the market wants to hear, what do you think is going to happen with the markets?
Well, I think the market could pull back. I don't think it's the end of the world or anything. I mean, we've had an incredible run without much of a 1% pullback. I mean, barely 1% at any time. So, and the market's kind of been pricing for the Fed to be more aggressive in lowering rates. So 25, 50, maybe anticipating 75 by the end of the year. And if they don't get that, or if the inflation numbers tick up, or the rhetoric comes out where they're not going to be as aggressive about lowering rates, I think the market has to step back and question this much of a rally. Now, keep in mind, it's also rallied off of very good earnings. So we got good earnings, good growth in the economy. We got, reasonably good unemployment. I'll bet 4.2, 4.3%. Right. That's still a healthy consumer, still spending, even though the housing market might be in a recession. So all in all, things are good. We don't want them to overheat, but the market's anticipating the Fed to cut rates. And if they change that mindset, or they kind of change the rhetoric, maybe they're going to do less, you could get some volatility in the market. And that might actually be a buying opportunity. We'll just have to wait and see.
Gotcha. Well, Graham, we always appreciate the information and expertise, and thanks to our listeners that check in with us every single week, and we look forward to seeing you next week.
Take care.